Okay, hello everyone. Matt with Green Bar Trading here, and welcome to another weekly watch list video. Last week, we absolutely crushed it. We went 6 for 6 in our stock picks over on Discord. I break down the chart that is of the stock that I'm looking at and potential trading plans. So we ended up going 6 for 6 on that, which it feels good. It feels good for the community, helping people see these opportunities. And then you do your own due diligence and decide when and, if you want to take a trade. I'm not here to, trade for you guys. I want you to learn technical analysis. I want you to learn to be accountable for your own trades. I've been getting a lot of questions. Should I get out of this? Should I do this? That is up to you. You're supposed to have a trade plan before you take your trade. Your risk, your reward, it's a lot easier to trade that way. It's a lot less stressful rather than these intraday moves, getting all nervous. What should I do? Well, trade your plan your trade, and just move on like that. Not every trade is going to work out. So when I come on here and I say we went 6 for 6, it was a week. It was an oversold bounce. It was an easier week to predict. Not every week is going to be like that. But going into the week, we were very oversold. And, usually you'll see bounces, especially during these bear markets. We can see some really big bounces. All right, so getting into it. This is the earnings for the week. Don't really care. Not much going on here. So that's the earnings here. The economic calendar, I do care about. Now, this is very important. If you're trading, if you're scalping, if you're taking swing trades, know the times of day that we're going to see reports come out. And if you're going to be holding swing trades, look ahead at the next day, a day after that, and just be aware that there's going to be massive market moving economic data events this week. So the macros on tap. Tuesday, we have the CPI. This is what the Fed likes to look at, the core CPI especially. This will move markets. On Wednesday, you have the PPI. So that's the producer price index. Also can have an effect on the market. Thursday, initial jobless claims, retail sales, and then the University of Michigan Consumer Sentiment Index. These are all really watched by the Fed, dictating where policy can go. We're currently in an environment where it's don't fight the Fed, right? In 2020, 2021, they were so easy with the monetary policy. We used to come on here all the time and say, just go long the market. It's not that type of market anymore. We're going to see bounces during these types of markets. Like I said, you can see some really big markets, but these are just being traded by the institutional money. They're not, creating new positions and going long. They're trading this market. They're trading the oversold. They're trading the overbought levels. And that's what they're doing. So they're buying a lot of put contracts. They're trading a lot. So you're going to see some more volatility. I believe that we will at some point retest the lows, whether that's this year or next year. That's anybody's guess. But inflation is a problem. So they're going to want to continue to see some good numbers with inflation. But as far as the economy goes, the economy is still doing very good. So people are still spending money. So we'll see what happens with that. Last week's relative performance. We have the 1 day, what outperformed the rest of the market. We have the 1 week and the sectors that outperformed other sectors. So what I noticed that's inching up here for the 1 month is the financials. The financials are starting to, what it seems like, make a little bit of a move. So keep financials on your watch. And, you know, energy outperformed on Friday, and on the week, still a decent week. Like we said, we saw that oversold RSI reading. That was basically what caused that bounce. All right, so we went through that stuff. One other thing I want to show you guys here, if I can get this to show. Okay, this is a bull bear indicator. So the way that people use this is a contrarian indicator. So when the bulls number, which we just saw September 6th, this comes out every week, it was 29.7, one of the lowest readings that I have seen. It's definitely the lowest reading. You could see here down with the blue right here. During you know, other really bad market times, the financial crisis, you know, we hit the lowest areas. So what I mean by contrarian is if everybody or if nobody is very bullish, because that's a very low reading, you can continue to see a bit of a rally. Now I'm going to be looking at these numbers that come out this week. If that number is still very low, as you can see, it's come down a lot and the market has bounced. That means that there's just more money on the sidelines that can add fuel to a rally. So this is a contrarian indicator. Like I said, that's a very low bull number. If we get another one this week, we can continue to see some strength possibly in the market. Nothing is certain, but it's just something I like to show you guys, you know, different things. So this is our Discord. Like I said, 6 for 6. Google, XLE, Pfizer, Microsoft, Tesla, and Apple. So 6 for 6, just showing charts. If you guys like what you see, you are in charge of your own trading. All right, so that's that. And getting into our compass, right? This is what we like to look at. This is the top 500 stocks in the US market. This is the ETF SPY for the S&P 500. All right, very simple stuff. Let's keep it simple. Technical analysis, key levels, and just a couple indicators. The 200, the 50, and then the 20 EMA. So what I see here, if I'm looking here at the compass, last week, right, oversold, saw down here, we almost hit 30 on the RSI and have now come back up. We also had support at 390 and an ascending trend line. This is why I do technical analysis. Do you think that it's just coincidence that we have this downtrend line, that it touched to the penny with the 200 moving average and then pulled back? I don't. That's why I use technical analysis. Do I think that this was luck here, that we held up and then saw a very nice bounce off of this trend line? No, that's why I do technical analysis. It doesn't always work out perfect, but in a market that is impossible, I don't care who tells you that they can tell you which way the market's going. Nobody knows. That's why I like to use technical analysis when I'm trying to determine possible moves. Like I said, nothing is certain. So what I see this week is I saw consolidation, and then a breakout of that. The only problem is the volume. I would have liked to see a little bit more volume. All right. But, you know, it is a bear market. These are bear market bounces. It's not like, you know, big, huge mutual funds, institutions are pouring money in. These are just these dead cat bounces, in my opinion. So where do I see the market possibly going if we continue this uptrend? We have a gap here that can possibly get filled, which is right up here, right around 420. It also coincides here with this downtrend line. It's a possible spot that we can see if it can get through where we were seeing resistance. So what was support turned into resistance, broke out of that, and then I can see us possibly price coming up to that spot. But this is, you know, we saw consolidation right through here. So is it going to be easy to just go right up? Probably not, because there is that overhead supply for maybe traders that are just happy to get, you know, after this drop, happy to get their positions back to where they want them. So anyway, that's the gap to fill potential and this downtrend line. That's if we can continue up. Like I said, we have CPI on Tuesday. So if the number is shockingly bad, that can change a lot of technical analysis. We saw a gap up over the 50-day moving average, and it did come back and retest that just about during this trading session on Friday. And then I saw a lot of really quick moves up off of that. So that's a very bullish indicator. But like I said, Tuesday, nobody knows what these numbers are going to look like. So if they are a crazy surprise where it shows something, you know, we're expecting some flat inflation or even some better numbers. If for some reason it's not, you can very easily just tank. So that is where we're at right here on the SPY. I want to show you guys the weekly chart. And on the weekly chart for this past week, that's a very nice candle. That's a bullish engulfing candle after 3 negative weeks. And now we're coming up to this 20 EMA on the weekly chart. So let's see what happens. Still in an uptrend. The uptrend is definitely under pressure, but it is a mini uptrend that's happening. Do we get back to that trend line, or was this a one-hit wonder and we start to trade in a range? Anything is possible. Just showing you guys this, and then, you know, do your own due diligence. So one other thing I want to show you guys is the last time that the market was in a bubble like it's in right now, or like it was in, was back in the tech bubble. That is in the year 2000, 2001, we started to really roll over. You can see here, it took a couple of years to actually finally hit the bottom and get valuations that made more sense. So I think, you know, this bubble, and we were definitely in a bubble. Valuations were way too high, housing prices were way too high, and now you have the Fed in a tightening cycle. So do I think we're going to retest the lows? I really do. I just don't know when that would possibly be. But like I said, it could take some time. You're going to see some nice rallies. You're going to see rallies that do really some big moves. Like I said, this is the weekly chart. So you got to realize each one of these candles is 1 week of trading. It could be very choppy. I like to look back at history to make, you know, educated guesses for where the possible market might go. So that's a SPY. Qs. This is what we see here on the Qs. Our tech stocks had nice bounce here from what we showed you guys in last week's video of a possible spot to see that bounce. It was oversold RSI. Like I said, last week was a lot easier to call than this week is. We're kind of in limbo right now. RSI is right in the middle, and this is a very tight spot here for tech. Mini downtrend line that goes back just a month, and then you have the 50 and the 20 EMA converging all at the same spot as this trend line. So we need to see this break and then you know, possibly a move higher here in tech. Watch the bond yields. They don't tend to do well when the yields continue to go up. And like I said, overhead supply. But you can see you got the bounces, then the pullbacks, then a bounce. It's choppy market. So trade like you know that. It is a choppy market. All right, let's go to the Dow Jones Industrial, which is the DIA. That's the ETF. And same thing, coming back up, the 50-day moving average, the 20 EMA. This is the bounce, the oversold RSI. That's what it was right here. So got to at least get through and hold the 50, and then maybe you could get another shot up to the 200 moving average. But like I said, big economic data week. Anything can happen. These are just the technicals on the daily chart. Same thing here. We have an ascending support trend line, got the bounce, oversold last week. You know, a lot easier to call. I know I keep saying that. This week you have 190, and then you have the 200-day moving average. This is what I look at. It's bullish that we broke over the 50. Let's see if it holds up. Sometimes price likes to come back down and retest these levels. So that's the IWM, which is the Russell 2K, the small cap stocks. Now, going into the stocks I'm looking at for the week, I'm going to continue to start with the stocks that were on last week that I'm still interested in, and that's Pfizer. I think Pfizer has a lot of potential. We had a great move here from support, great move here from the bottom of this channel that we're trading in, and this is where my target's going to be. First, at the 50-day moving average, which is coming down, not bullish. You would like to see this moving in the other way. So this could be a spot for taking profits if you have, you know, multiple shares from our trade from last week. That's somewhere I would look to take definitely a % off of that trade, just in case we reject the 50, and then you have the 200. But eventually, I can see this getting to the top of that channel. It's not going to be one straight green line. Nothing's that simple. So that's the trade. Trade your plan. I'm still holding this. I bought right in here, and then you know, we saw the breakout of consolidation, which is very nice to see. No reason for me to have gotten out of that trade. So that's Pfizer, still on watch. And then XLE, another one that we called out. It's still respecting our trend line. It's still making higher highs, right? Higher lows. There's zero reason to short the energy market until it breaks this trend. Right now, it's acting very good. So that's the XLE, still on our watch list because it's still in a confirmed uptrend. All right, so those are those two. And then Microsoft, another one from last week. We saw the bounce off our ascending trend line that we called. And now we're going to come up to, you know, a little bit of issues here at the 50-day moving average. And if we can break through that, then you have this gap here to fill, which is going to be close to the 200. Like I said, this could take time to play out, but it does look like it wants to go higher if it can get through here. If not, it's going to pull back to this trend line. So keep that one on watch. Amazon filled the gap perfectly and now is starting to break out more. This to me has a clear shot at the 200 moving average. All right, so that's Amazon. Disney, another one, came back down, filled the gap, and now we have another gap to fill on the upside to 120, and then possibly a test that it hasn't done all year at the 200-day moving average. But it's making a series of higher highs, higher lows, and that's what I have. So Disney, I would definitely stay long with. Meta, trading in this channel. So this is a perfect basing formation. It does not want, the bears cannot get this below 155 here. So this is a very solid level of support. It did break over the 50, which is good, but it's done this before, and then it's pulled on back. If it can hold up, you have some room here to go to 183, which is where we saw this, the top end of the range that it's trading. So Meta, definitely forming a bottom, and you know, its valuation is pretty good. So like other stocks that are way overvalued, this one is still, you know, definitely not overvalued. So that's Meta. Where are we at here? Went through all those. Airbnb. This is what I see here with Airbnb, is a head and shoulders pattern. If this is a head and shoulders pattern, an inverted one, the likelihood that we can run up here to this trend line and the 200-day moving average is looking really strong. So you have your shoulder, your head, your other shoulder here. It's an inverted version that we've seen play out a lot. So Airbnb, you have some room here. It did break out of consolidation. So I like this one, at least to make a run right up to there, right up to that area there. All right. So that's that. And I think that's going to wrap us up. All right. So I hope you guys enjoyed it. I know these videos are a little bit long, but there's a lot of research that gets done. Hit the thumbs up, and I will see you guys this week. Take care.